Did you know that opening an S-Corp could actually be a major mistake?
What?
Yes, that's right. Even though the S-Corp is often promoted as the ideal business structure, the truth is that for many people, it is the wrong choice to make.
I didn't know that. You didn't know that?
And if you make the wrong choice when it comes to your business structure, then you could be forced to deal with a world full of stress, pain, headaches. Listen, we already got the pandemic, inflation. The last thing I want for you is to have to deal with more stress in your life because you chose the wrong business structure that creates more problems than it actually solves. So in today's video, I'm going to explain exactly who should not go with the S Corporation as their business structure. But as always, make sure you stay all the way to the end of this video because I'll tell you one important piece of information about the S Corporation that could save you hundreds of thousands of dollars in taxes. Without further ado, let's dive in. All right, guys, choosing the right business structure is absolutely crucial for remaining in compliance with the IRS, optimizing your tax savings, and keeping your business operating at maximum efficiency. So in this video, I want to make sure I'm diving into the reasons why you should never set up an S Corporation. Before we do that, I need you to know what an S Corporation is. As a quick reminder, an S-Corp is a closely held corporation or a partnership or LLC that has chosen to be taxed as a subchapter S of Chapter 1 of the Internal Revenue Code. Now, S-Corps are pass-through entities. It means that their taxes pass through the corporation onto the business owners who are then taxed one time in their personal returns, okay? S-Corps are different from C-Corps, which is another type of corporation. And because C-Corps have double taxation, meaning that the owners pay taxes both at the corporate level and at the individual level, S-Corps are different from their standard LLCs because S-Corps are limited to 100 shareholders and owners can save all the self-employment taxes by splitting their income into a salary portion and a distribution portion. So they only pay self-employment tax on the salary portion. But just because it is possible to save money on self-employment tax with an S-Corp does not necessarily mean that it is the best option for you. In fact, if you meet any of the following criteria, then you should not open an S-Corp in 2023. Number one, you're not organized. And I know it because an S Corporation is an actual corporation. It is way more complicated to run than a less formal business structure such as an LLC or a partnership. And as a result, running an S Corp requires a higher level of organization and discipline. I don't recommend S Corporation owners for people who are not disciplined. The rules for setting up an S Corp are generally more strict than they are for less formal business structures, and the compliance and reporting are a little bit more demanding. So if you are someone who just wants the simplest possible business structure, and if your organization is not something that you're taking as serious for tax savings, then the LLC might be a better option for you. Now, number two is that you refuse to use separate bank accounts. Listen, if you have an S Corp, then it's absolutely critical for you to separate your business bank account for it. There are a number of reasons why this is the case, but first, you want to keep the business funds separate from your personal funds because this will help to limit your liability and protect your personal funds from being potentially seized in the event of a lawsuit. So if you keep all of your funds in just one account, then it's harder to show which funds are business funds and which funds are personal funds, and this can potentially put your personal funds at risk in a lawsuit. Just imagine how awful would it be to have tens of hundreds of thousands of dollars seized from your personal bank account in a lawsuit because you simply didn't open up a separate business bank account that could have been determined as your business funds separate from your personal funds. Yeah, this is definitely something you don't want to have to deal with in your lifetime. And this might be one of the reasons why you choose not to set up an S Corp. It's also just generally easier to do the bookkeeping and tracking of expenses and income if you have separate business bank accounts. Taxes for me can be significantly simpler that way if I'm keeping things separate. However, even though having a separate business bank account for your S Corp can make things a little bit easier, safer from a legal standpoint, some people just hate using two different bank accounts for their business. And it bothers me. Many of these people just find it too inconvenient and they don't want to have to carry multiple debit cards, remember multiple PIN codes, do everything else that is required to manage several bank accounts. So if you are someone who doesn't want to use multiple bank accounts, then S Corps definitely will probably be the wrong business structure for you. I want to make sure that you are leveraging your business the right way, but if you're not someone that's willing to discipline yourself to use separate accounts, then it might not be the right structure for you. And the third reason why you should not open an S Corporation is because you refuse to open up business credit cards instead of commingling with your personal credit cards. You see, just like having a business bank account, Having a business credit card helps you to keep your personal and your business expenses separate. However, many business owners refuse to open up a separate business credit card just because they don't want to juggle multiple credit cards. Guys, I cannot tell you how many times I've ran into business owners who make the mistake of using their personal Amex cards or their personal Chase cards, and they tell me, Karlton, I'm only putting business on it. Well, yeah, you're only piercing the veil of your LLC or your S corporation.
You're stupid.
Why are we doing that? It's easy enough to just go and get a business credit card with your EIN number. But business owners forget to do this, or they don't want to take the extra step to do it. You see, expense reporting can be a daunting task for small businesses, but having a separate business credit card can make it significantly easier to track expenses. There's also a number of other key benefits to just having a business credit card. For example, business credit cards often come with great travel discounts, higher credit limits than personal cards, longer billing cycles, lower interest rates. Listen, having a business credit card can help you to boost your business credit rating, help you to build your business faster because you have more access and lines of credit. You have a business credit card, it can also give you additional protection against theft and fraud. And that's because if your card is stolen or lost, you can immediately freeze the card. And meanwhile, your business bank account will be untouched. So in other words, if you have a business credit card, it prevents you from keeping all of your eggs in one basket when it comes to your business's money. Maybe you're option number 4, and I'm hoping it's not, but maybe you are. Maybe you just don't care enough about payroll and understanding self-employment tax. Maybe you don't care about understanding it. You see, one of the main reasons why people open S-Corps is to optimize their payroll and save money in self-employment taxes. However, you will only be able to do this if you care enough about payroll and understanding self-employment taxes in today's marketplace. Otherwise, having an S corporation isn't going to even save you money because you don't even know what it's there for.
Obviously.
So typically, self-employed business owners who do not have S corps, who instead use LLCs or sole props, they're required to pay 15.3% in self-employment tax. So let's just say that you're making $100,000 in an LLC. This would be $15,300 in self-employment tax. That is comprised of your Social Security and your Medicare. Welcome to my YouTube channel. But if you have an S Corp, then you can save yourself a lot of money in self-employment taxes. This is because you can technically be an employee of your own company and yes, a shareholder at the same time. I know it's amazing. Now, this allows you to split your income into 2 categories, salary and distributions. When you do this, you only pay Social Security and Medicare taxes on the salary portion, not the distribution portion. This saves you in self-employment tax. Okay, hold on. Let's go back to that example of $100,000 in income. If you are making this much money per year, and if you had an S corporation instead of a sole prop or an LLC, you could take a reasonable salary, maybe 40 G's. Let's just say the remaining 60 grand is business distributions, the business's income. If you do this, you only pay Social Security and Medicare taxes on that 40 grand, which comes out to about $6,120. That saves you a little over $9,000 in self-employment taxes by having an S Corp instead of an LLC or a sole prop. However, despite the fact that the incredible amount of money is being saved in self-employment taxes, some people simply do not want to take the time to understand payroll. They don't want to take the time to understand self-employment taxes, and they get all lost in the sauce. Therefore, you're unable to capitalize on the benefits that the S corporation provides. Now, I'm hoping this isn't you, but you might be number 5. You're afraid to get serious about your taxes because you don't want to mess up. This is an important one, guys, and I have to address it. There are a lot of people out there who could be saving a ton of money by making the switch, making the S election, and getting into the correct business structure. However, doing this requires for you to get a little bit more serious about your taxes. Maybe you're just curious and you just browse on the internet. You're not serious yet. Unfortunately, some people are either intimidated by taxes to make the switch, or they're afraid of making a mistake and having the IRS chase them down and punish them with fines or potentially even prison time if they don't do everything 100% correctly. Don't be in fear. This does not happen. It is understandable that some people can get nervous about making some big changes from a tax perspective. You know, switching to an S Corp isn't, the biggest life change, but it can make some people nervous. Maybe it's you getting out of your comfort zone. And maybe this is how you progress as a business owner. But if you aren't ready to make a significant change to your business by making the S election, then the S Corp may not be the best option for you. And then, of course, there are more filing requirements, Karlton. I'm not prepared for this. You see, S Corps are corporations. They're not just companies. They're a little bit more complicated from a filing requirement perspective. For example, S-Corps are required to file a 1120S form. This form provides a lot of the key financial information about your S-Corp to the IRS. It lets the IRS know your income, your losses, your gains, your deductions, your credits. But this form includes a Schedule B, which requires you to provide other information about your S-Corp. This information could include the information about the ownership interests of the S-Corporation, or the details about any stock your corporation has in other corporations, information about whether or not your S-Corp's total receipts were less than a certain amount for that year. It also shares information about whether or not your S-Corp's total assets at the end of the year were less than a certain amount. So there's just a little bit of additional filing. Now, in addition to having this Form 1120S for your S-Corp, you will also have to file what's called a Schedule K-1 form. The Schedule K includes information regarding income, distributions, credits, and really other items that pass through the corporation onto the shareholder, which is you. So you will also be required to file a Schedule K-1 at the end of your S-Corporation's tax year. The K-1 includes information about the shareholder's income, deductions, and credit, as I mentioned, but this form must be issued to each individual shareholder of the S-Corporation that's an owner. Each shareholder receives a K-1 and is required to use that K-1 information to complete their individual tax returns. These are just some of the filing requirements for S-Corps. There are obviously a number of others, but the bottom line is that the filing requirements for S-Corps can be a little bit more intense than they are for other business structures, such as like the LLC, the partnership, and the sole proprietorship. So if you're not prepared to deal with the additional filing requirements, maybe the little tiny additional headache in your first year of learning, then this is a sign that the S-Corp may not be the best business structure for you just yet. And maybe number 7, you haven't found an advisor. You haven't chosen to even look for an advisor. You see, some people are aware that switching to an S-Corp might provide some considerable tax benefits. They see the YouTube videos. However, instead of actively seeking a tax advisor who can help them make the transition and calculate the numbers, they simply don't take action at all. They let years go by, they file their tax returns, they overpay, and they have no desire to go and seek somebody out. You see, if you have no desire to seek out a tax advisor and to help yourself transition to an S-Corp, then you might be better off simply staying as an LLC or a sole proprietorship and just paying taxes. Now, I'm just being honest with you. It takes you wanting and needing to save money to go and seek out the right advisors. So I always ask this: what is the best business structure for you if you decide not to be an S corporation? You see, if any of the 7 points I just mentioned above, if you feel any type of way about them, then the S corporation might not be the right choice for you to apply to your situation. You might be wondering, well, then what other business structure should I go into? Well, one of the best options is just the standard LLC. You see, with the standard LLC, you still get many of the same benefits of an S-Corp, such as the pass-through taxation, the liability protection. However, LLCs don't have as many formalities. They don't have as many filing requirements. They're a little bit less expensive to file the tax return, so they're easier to manage. But LLCs are also more flexible in terms of ownership and management. For example, LLCs can have more than 100 owners. S corporations cannot. If you want to have more than 100 owners for your business, LLC could be a better option for you. But just remember, if you go with the standard LLC, you will also be subject to self-employment tax on all ordinary income. And this is because all of the profits get subject to Social Security and Medicare tax, unlike an S corporation who takes payroll. What about sole proprietorships and general partnerships? There are also some good options. They don't provide that liability protection that you're looking for. So I would be hesitant to just get into a GP or just get into a sole proprietorship. That doesn't give me any liability protection. It honestly makes me fearful to grow a business in that sense. So keep this in mind if you're thinking about going with a sole proprietorship or a general partnership. Now, we've made it all the way to the end of this video. Well done. You've done a great job. Here's what I want you to take away from this video as always. S-Corps are not for everybody. So you shouldn't force yourself to try to get one. You shouldn't force yourself into trying to get something that you're not prepared for. They do provide substantial self-employment tax savings, but that doesn't automatically mean that they're right for everybody. If any of the things that I mentioned in this video, such as not being organized, refusing to open separate bank accounts, not wanting to use your credit cards for business, instead you want to use your personal credit cards, you don't care about taking payroll, you don't care about avoiding self-employment tax. If you want a simpler business structure, you can always go with a standard LLC or a sole proprietorship or even a general partnership. Now, if you have any questions about S corporations, other business structures outside of S-Corps, or if you have any tax questions really at all, then feel free to get in touch with my company by clicking on the links below. You're more than welcome to schedule a complimentary consultation. Also, if you want to learn how to save big money in taxes, and I'm talking about big money, I'm talking about more than 50 to 100 grand in taxes, then I would love for you to check out my program, Tax Alchemy. This course allows for me to be able to put some of that secret sauce information that I don't share on YouTube in video format. Plus, we have coaching calls every single week where I can educate you on the strategies to make sure you're implementing them correctly. That's all I got for today's video, guys. I hope you enjoyed this one, and I'm going to see you on the next one. I'll see you there. Cheers.